Hello, everyone, and welcome to another episode of the Reinsurance podcast. I am your co-host, Jared Lee.
And I'm Ben Rose, here against my will. That's right, Jared, because today's topic is one that does not interest me very much. I don't know enough about it, and that's probably why.
Yeah.
And it often gets accused of being vaguely close to the technology space in which we work.
It does.
But go on, convince me in this episode that we actually do care about blockchain, crypto, and everything that goes on the dark side of finance.
Yeah, it's, do we care about blockchain? I'm not entirely sure. Blockchain is, in fact, a thing. What we wanted to spend a bit of this episode talking about was crypto in sort of the mirror of the FTX collapse. There's been a bunch of conversations historically about where does crypto fit in the insurance segment and vertical in its entirety, and how that the industry will evolve to provide crypto protection and coverage and all these types of things. But lean into one of the largest erosions of value in recent. I mean, the amount of money that collapsed with the FTX bankruptcy was profound, and I think it sort of shone a bunch of light on the space and the vertical and how it's impacted by insurance and reinsurance more broadly. So I wanted to touch on that. Even I have brought notes today for the first time on the Reinsurance podcast. There's a notepad here with.
I think I'm probably giving it a bit of a hard time. And I'd love to go back into the sort of the journey to crypto and going a long time ago. To Bitcoin. I'd be interested to hear your memories of your first interactions with, a Bitcoin. What is that? Or, seeing this comic-like kind of bee with a line through it, a symbol, and wondering what on earth that could mean. I actually ended up having to become a sort of semi-expert for early blockchain and distributed ledger technology when it was first coming onto the scene, because I was the InsurTech consultant person at Aon. And so had to guide lots of our clients through many myriad topics, including AI, machine learning, blockchain, etc. And blockchain was always the most controversial one because it was released with this tagline of, it could be the perfect use case is insurance, one, and two, it could make everyone redundant as a result. And so we just had so many conversations of panic that this decentralized version of record keeping effectively could become the norm. Yeah. And I guess we're about to discuss the ways in which it did become a norm for some people and the resulting trauma that it caused.
Well, it's important.
That model fell down a bit.
Yeah, it's important to define or highlight the difference between blockchain, which is the technology on which a number of things can happen, including the trading and purchasing and utilization of cryptocurrencies, and cryptocurrencies themselves being an asset which leverage a blockchain technology in order to be deployed. But so the blockchain piece aside, I think the industry, and I think we might run a whole other episode on just blockchain and insurance, because I think it was one that was very much seen as where the future of the industry would take it. And in some ways, if the technology became so ubiquitous that it began to be the framework by which all technology was built going forward, essentially blockchain bulls sort of looking at it going, this will be sort of the new framework of the internet, right? In that case, it might evolve somewhere there. But I think there's a whole case to be made and a conversation to be had about that. But if we look at just cryptocurrencies, the earliest being Bitcoin, the earliest I'm aware of being Bitcoin, and I think that's correct. The first experience I had with it, and this is sort of me, old man shouting at clouds, was in university, and it was this was back when Bitcoin would have been a couple dollars a coin, and I remember there was the stories of people, like what it was being used for. And at the time, it was still very much seen as this untraceable, anonymous sort of system. And it was all used for selling in drugs and buying illegal services on the internet. And I kind of looked at it going, I don't know where this fits in the world. But a lot of people made a bunch of money, right? There's a lot of people who took advantage of cryptos and became very, very wealthy as more coins emerged over time. you saw the sort of speculation of coins continue to rise, and you saw the introduction of sites like Binance and FTX and others as a means by which you could trade various cryptos and speculate. But it always sort of remained in this realm of currencies by which you could speculate on their rising and falling in value.
Yeah, I mean, I think it came off the back of, at the time, people were less aware that it was actually a double-edged sword, in that you could both destroy the environment as much as possible whilst creating a currency at the same time as making the providers and purveyors of illegal goods very, very wealthy, almost overnight with virtually no work.
Yeah.
I think that began to get people excited, right? You'd see all these news stories coming out that like, oh, a guy who sits and, mines Bitcoins ends up becoming multi-millionaire overnight because gradually more and more people are interested in this Bitcoin thing.
Yeah.
And I think what we saw afterwards was actually this huge pent-up demand and not much supply, and people needing some kind of official-esque framework. And I think everybody had one of those friends, if not, it was perhaps you yourself, you were listening to this podcast, but somebody who had found a way to buy or sell Bitcoin or one of the other coins that came out, as Ethereum started to offer other ways of doing it and so on. Yeah. But there was always somebody who's like, oh, well, I use Coinbase, or I use whichever site you might have used, whichever marketplace you might have used to exchange fiat currencies or real, I think we call them real, central bank coordinated currencies in a traditional sense, to swap them for a share of these larger currencies. And ever since then, there's been no stop really to the roller coaster of the valuations of these cryptocurrencies that have gone up and down based on the whims of WhatsApp groups around the world.
Yeah, well, and there's in a similar way when you saw the sort of meme stocks, right, GameStop and all this sort of stuff, that there were people who got in that, who followed the Reddit the Wall Street Bros subreddit and made a bunch of money. But most people who got in on this sort of massive spike in this trend lost all their money, right? And I think the same thing is true in a lot of the sort of heavy crypto traders. There's certainly a lot of people who've made a huge amount of money, but the vast majority of people, like in all these sort of behavioral sort of movements, ended up losing their shirt, right? And I think the FTX collapse caused so many more people to lose their shirt, and it has caused the industry to take a step back and shine a light on what's happened and gone, where have we gone wrong? And there's a few things that happen there that I think need to be solved for crypto to really anchor itself going forward. One is there's no sort of governmental framework by which protects these assets in there, right? Like, if you go to a bank, like all major banks around the world will have some limit of amount of default insurance that you get for your deposits. Like, those things do not exist in a crypto world. So if there's a rush on the banks, it won't go to zero. You're not going to lose everything the way you did in sort of the crashes in the early 1900s.
I mean, FTX being a prime example, right? Yeah. In the sense that, and the best thing is the guy's name as well. For those of you who don't know, the sort of founder or owner was a guy called Bankman-Fried, Sam Bankman-Fried, who, in his quest to free people from the bankman, decided to store effectively or to hold a lot of his own, or the bank's, the actual entity's assets in other risky crypto coins, including many, I think, which he was also separately involved in. So it's something like the entire wealth of the FTX, or like a very large portion of the assets held in FTX, were actually, I won't say collateralized, but effectively backed up by this other coin that he was the main owner of.
They built all manner of clever ways to stabilize the coins, and his own coin and as well as other coins being traded. But because it was all sort of mathematically linked, when one of them in the chain began to drop, the whole thing began to fall down. I'm proud you didn't go to a Sam Bankman in jail.
No, indeed.
But yeah, he's in a lot of trouble from that now. And it's interesting. There's a lot of comparisons to him because he'd promised to give away a huge amount of his personal wealth because he'd become a multi-billionaire at that point. And there's a lot of comparisons to him to John Pierpont Morgan and someone else who sort of donated a huge amount after amassing ridiculous wealth as J.P. Morgan began to rise. But it was a lot more speculative and a lot less sort of built in traditional forms. But as crypto began to emerge as a class, and you have even in this space, you can probably include digital art and this sort of stuff. Insurance has begun to try to respond to that, and the insurance industry has always been very good at recognizing assets and things people want to protect and building solutions that allow them to protect those assets. For us as the Reinsurance podcast, there is in fact a reinsurance company focused on supporting the insurance companies in this space called Realm. And again, the angle being they were designed to support this type of class and everything else. But like any major carrier who's very heavily exposed to a certain class, they reinsured a huge amount of FTX stuff. And although there's a lot of assets and wealth that has just been entirely erased, there's still insurance on the hook for some of that, and they're getting rinsed a little bit as a result as well.
And I think this is where, again, you need experts in the space to have a hope of coming out with, your shirt, as you said earlier. And I think some of the things that were done as insurers began to grapple with this whole new asset class were to look at the different types of asset in some ways and how those assets were stored. And also what type of peril effectively they were covering against. So yep. Some of the most traditional forms we've seen are theft, for example. So, I mean, I don't know the wordings well enough to know whether Sam Bankman-Fried's fraudulent kind of activity could be counted as theft. But in most cases, it would be somebody's stolen the details to get into your wallet. But we came up with these other concepts, or these concepts in insurance came to be known of, to quote Katy Perry, you're hot and you're cold storage. You didn't see that one coming, did you?
I did not.
But this idea that, basically those coins that you have in hot storage, so those that are out on the market, are more risky than those that you've got stored offline effectively. In cold storage, and so different rates would be applied depending on how your coins were looked after effectively. But they had to come up with some kind of parameters.
But cold storage, whilst it's protected from the risk of hacking to some degree, it's the equivalent of burying money underneath your house, or there was a famous story from a number of years ago where it was like drug dealers in Latin America or something, but there was a massive fire that had come through and just burnt hundreds of millions of dollars that were like buried in the woods. And cold storage, and there's a story out maybe a few weeks back now, but there was a person who had a jump drive with like a couple million pounds of crypto on it, and they had like one more password guess before the thing would be locked forever. And like that's also the risk of pure cold storage, is that if you get locked out, and the way crypto often gets set is you have to have these really long, complicated passwords to sort of lock the data, that it presents a risk of going, if you forget where you wrote that down, that is forever inaccessible, and that's equally frightening, right? So again, when you look at it and compare it to the sort of rise and stabilization of fiat currencies around the world, we had to build mechanisms to make it safer to be in a bank than be buried in your backyard. We had to make it safer to trade so we solved these problems bit by bit by bit, and I think cryptocurrencies will go through a similar journey. But you raise an interesting analogy from an insurance perspective on how we protect and, let's say, underwrite this risk. It's the same way a couple hundred years ago we'd have all these fires, and we would say, okay, we'll insure you now, but are you locking your doors? Are you building your building in a way that is at least, more secure and more fireproof than the old way? And I think when you look at how we underwrite most insurance risks, we'll sort of go through and go, are you protecting yourself before we insure you? Are you trying to mitigate your risk? I think we'll do the same thing in crypto going forward, is ensuring and forcing that sort of diligence of underwriting.
No, absolutely. I'm optimistic, that something will come of this space. I know we've seen from, its early roots of more questionable kind of patterns of cryptocurrency to something that was available easily on the challenger banks apps, that you could easily balance your risk between different currencies of the crypto and non-crypto variety. But it does raise a question now after a crash like FTX as to whether that's something that the market will recover from. Because without that, there's not really going to be demand for an insurance class that becomes, comparably large. I think typically we've seen insurance markets track GDP for the given, or less in some cases, but for the given amount of wealth generated by the thing being insured, right? So the more crypto there is, presumably the more insurance there will be. But I think at the moment there's a big question mark as to how much more crypto there will be.
Yeah, and I think the markets respond slowly to that, especially with individuals doing things. So you've always seen after crashes historically, there's always been a response and the market rebounding there. But a lot of that's driven by professional traders, right, who are incentivized to bring capital back into the market, encourage people to reinvest in the stock markets after some crashing. So I think it will happen. I just don't know. I have no idea what the time frame for that might look like from a crypto perspective.
We'll have to wait and see.
We will indeed. But I think it's all we can do on crypto for the time being. We're nowhere near sufficiently expert in this space, but we might dive into this in future podcasts. But with that, thank you for listening to this episode of the Reinsurance Podcast.